You're welcome. Good morning. Good morning. All right. So today is today is very, how do I call it? It's remarkable. Today is the 11th of November, 2024. All right, so we'll look first at the fundamentals, then we'll go over to the technicals so that we can, have a broad view of what to expect in the market for this week. So today, Monday, we have all day Euro French bank holiday. So we need to be careful with the Euro pairs today because on the Eurozone, there'll be French bank holiday. And today again, all day there will be bank holiday in Canada, there will be bank holiday in the United States. So I will advise us to trade with a lot of caution today. United States bank holiday, Canada bank holiday, Eurozone bank holiday. At least those three pairs we need to be careful of them: the euro pairs, the card pairs, and the dollar pairs. So we trade with a lot of caution today. So, but then because of time, we'll look at just the important events we have for the week. Tomorrow there'll be claimant count change from the United Kingdom by 8 a.m. It's going to be a high impact event, so we can trade it with caution though, and it will happen simultaneously with the average earning index, both of them coming up by 8 a.m. tomorrow. And we also need to be careful tomorrow by 4 p.m. There'll be FOMC member Waller who will be given a speech. Same thing, 11 p.m. tomorrow, FOMC member Aka will give a speech. Those might have impact on the dollar. And for Wednesday, the important event on Wednesday is by 2:30 p.m. and that's the core CPI, the CPI monthly, and the CPI yearly from the United States. So we should look forward to that. CPI is usually a volatile event. Hopefully, I believe we should be trading it live. So let's plan ahead for that. So Wednesday is a big day for this week, with CPI. And on Thursday, there will be the employment change and unemployment rate from Australia by 1:30 a.m. So you can stay awake to trade it. I mean, there's no harm in making a few dollars in the middle of the night so that you can spend good money in the course of the day. So you can watch out for that by 1:30 a.m. on Thursday. And during the course of the day on Thursday, there will also be the core PPI monthly and the PPI monthly and unemployment claims, three of them from the United States, by 2:30 p.m. on Thursday. So we can watch out for that. This is expected to have a high impact on the market. And also on the same Thursday, there will be a lot of volatility across the euro, the dollar, and the pound because of all the speeches that will take place. 8 p.m. ECB President Lagarde will give a speech. 9 p.m. Fed Chair Powell will give a speech. 10 p.m. Bank of England Governor Bailey will also give a speech. Though this will be later in the night, but then if you have running trades, you need to be careful because these three events happening one after the other could lead to a lot of volatility in the market. And finally, on Friday, we're going to be having the GDP, the gross domestic product, from the United Kingdom by 8 a.m. So let's watch out for this. One benefit of fundamental events is that you can plan ahead of them and take your trade, in due course. You can plan ahead and, take it. So also on Friday, there will be the core retail sales and the retail sales, also followed by the Empire State Manufacturing Index by 2:30 p.m. on Friday. So these are the major events, we just quickly run for the week. So we can look forward to these events and plan to trade them. So I'll flip over now to my MetaTrader 4 and we'll look at the technicals that we have for this week. Now, the US election has come. The winner has been declared and it's Donald Trump. So, that really led to a lot of spike in the market, a lot of volatility in the market last week, especially on the election day on Tuesday. The market really went, really, really volatile. So, but then market is trying to recalibrate itself. Normal activity, normal movement should start in the market this week. Some readjustment, some continuation we're going to see. Now, for the dollar index, this is my view for the dollar index for this week. I can see we have this trend line on the daily time frame, so we have a series of lower highs here, and from my view, I perceive we should expect a further decline, in the dollar in the course of this week, because price is, hitting the trend line, and there's a 1, 2, 3 rule where when price hits the trend line the third time, we expect a continuation. So I expect a bounce in a bearish direction on the dollar for this week. So technically, I hold a bearish outlook on the dollar index for this week. So if we have a bearish outlook on the dollar index, then I'll be looking at the USD CHF. Now for the USD CHF, this is my view. Now on the daily time frame, we can see that we also have, the trend line descending downwards, and also price touching it the third time here, which technically should lead to a bearish movement. Also, there is also this support turned resistance here, with this zone now becoming a confluence between the trend line and the support turned resistance. That is a further confirmation of a bearish movement on the USD CHF. So if we zoom it down to 4 hour, on the 4 hour time frame, currently what I'm seeing here is a pattern that is evolving, which may look a lot like a double top. And if that finally evolves into a double top, it will give a confirmation of a bearish movement on the USD CHF. So I hold a bearish outlook on the USD CHF. Now, this is just analysis. If this really evolves into a double top pattern, then we can look at making our entry at the break of the neckline, just where I'm putting my horizontal line to. So whenever price breaks out below this neckline region, then we can trigger a sell. At least price is expected to go to the next support level, which is going to be this zone, and that can give us on the average at least about 70 pips on the USD CHF. So I hold a bearish outlook on the USD CHF for this week. Now this is a swing setup, is a 4 hour setup. We trade what we see. That is what the market is giving at the moment. So that's what we trade. I'm trying to go down to lower time frame, but I'm not really getting much confirmation of entry on the lower time frame for now. So we'll stick with what we can see, which is a swing. So again, I hold a bearish outlook on the USD CHF. Now, if this really works out and price comes down to this level, I believe what will happen ultimately is that price may eventually form a big head and shoulder for a massive dump much later. But then that's just on a bigger perspective. For now, let's take what we can see, which is a double top forming on the 4 hour, where we expect a drop. So I have a bearish outlook on the USD CHF, and in the same manner, I also have a bearish outlook on the USD JPY. Since the dollar index is bearish, then these major currencies where the dollar is the base currency is expected to follow suit in that same direction. For the USD JPY, if we go to the daily time frame, we can clearly see that price, is trying to, not even trying to, it already hit a support on resistance zone right here. And not only that, I can also clearly see that we can draw our trend line here to form a rising wedge pattern. Now with price hitting the support on resistance, that tells us we're expecting a bearish movement on the USD JPY. And also with a rising wedge pattern, it equally means we're looking for a bearish breakout. And if we move now to the 4 hour time frame, I'm seeing a pattern that is evolving, which may evolve into a head and possibly a shoulder pattern, which will lead to a bearish breakout also. So if this works out as we're looking at, then we may be expecting a breakout, at least right below this region. So if that happens, then we should look at taking a bearish trade on the USD JPY. We shouldn't forget confirmation for that trade also would mean that our RSI on the 4 hour time frame should be clearly below 50. That's our final confirmation, to trigger a bearish trade. So I hold a bearish outlook on the USD JPY. And same thing also on the USD CAD. I equally hold a bearish outlook on the USD CAD. Now for the USD CAD on the weekly time frame, price has not been able to break out above this resistance zone since October 2022. Yeah, since October 2nd, 2022, that is in the last 2 years, price has just been trading around this resistance level. Now, price is back into that same resistance level, or resistance zone rather, on the weekly time frame. If you go down to the daily time frame, you can see that price is still within the resistance zone. Now, we zoom down to 4 hour. Now, on the 4-hour time frame, I can clearly draw a trend line here and a second trend line at the back to form a rising wedge pattern. Now this one, I wouldn't say whether it's going to be a double top or head and shoulder. It's not so clear at the moment, but what I strongly believe is that price is expected to still break out. At least if for any reason at all that we have a resistance and we have a rising wedge, we should anticipate a breakout of price, on the USD CAD. So due to that, I hold a bearish outlook also on the USD CAD. And the final confirmation would be that RSI should be clearly below 50 for us to trigger a sell on the USD CAD. Okay, so that's it for all the dollar pairs where the major currency rather, where the dollar is the base currency. Now, since we're bearish on the USD CAD, the USD CHF, USD JPY, then we're having the bullish outlook on the Euro USD. Now, to be honest, the dollar is the king this week, and that's largely because of the just concluded election, from the United States. So for the Euro USD, we can see that price is, trading around this trend line on the weekly time frame. So technically, we should be expecting a bounce in the bullish direction. That's what, is expected here. Now, if we look also critically, we can see that where price is at the moment, on that line, you can see the price line here. In time past, price has always reacted at this same price level. You can see at the point here, it acted as a resistance. Here, it was a support. Here again, it was a support. Here again, a support. This one is very close, still a support. So that tells you that that current price level is a key level. Now that key level is now in confluence with this trend line from the weekly time frame. So if we zoom down to the 4-hour time frame, we can clearly see that that confluence also is evolving into a double bottom pattern, which is expected to trigger a bullish breakout on the Euro USD. Now, don't forget that we are bearish on the USD CHF, and we actually saw a double top pattern on the USD CHF. So it's not in place to have a double bottom on the Euro USD because both the Euro USD and the USD CHF, they are actually negatively correlated. They go in opposite direction. So we have a double bottom on the Euro USD, and we'll look at taking the buy trade once price breaks out above the neckline, right here. And we can target the next resistance level as the take profit level. And you may just put a penny order at the tip of the neckline here. And going up to this area here will give us at least about 100 pips on the Euro USD when price eventually breaks out above the neckline. So we hold a bullish outlook on the Euro USD. And next we're looking at the AUD USD GBP USD. So this is the AUD USD. Now for the AUD USD, we'll start on the weekly time frame. Now on the weekly time frame, we can clearly see that price is also trading on the trend line. We can see price is making a series of higher lows, higher lows, higher lows. So technically, we should expect a bounce in the bullish direction. More so last week candle, the whole of the week ended up like a kind of a rejection candle. So that tells us we should look for a bullish movement on the AUD USD for this week. So if we go down to the daily, nothing much on the daily, but we go down on the 4-hour. On the 4-hour, if we zoom it, this manner, what I'm seeing here is a pattern that is looking like an inverse head and shoulder, which will trigger a bullish movement. That's my view. on the AED USD. And further confirmation to that is that I can clearly draw a trend line here and a second trend line from this angle to form a falling wedge pattern, which is another confirmation of a proposed bullish breakout on the AED USD. Final confirmation would be RSI to be clearly above 50 for us to trigger a buy on the AED USD. And I'll also advise, since this is a swing setup, that's what the market is giving this week. Since it's a swing setup, I would also advise you wait for a clear break above this zone here for us to trigger a buy. Very, very important. Wait for price to break above the trend line and above this zone to trigger a final bullish movement on the AUD USD. So we're bullish on the AUD USD, and like I said, we're equally bullish on the GBP USD. For the GBP USD, we'll start from the daily. On the daily time frame, we can clearly see that price is trending in the bullish direction. These are higher lows, higher lows. Third time price is touching the trend line, we expect a bullish movement. And if we go down to the 4-hour time frame, we can clearly see that we have a falling wedge pattern. I wouldn't call this completely an inverse head and shoulder, but then all I know is that price is expected to break out, from this falling wedge pattern. So if it works out exactly like that, then we should get ready that whenever price breaks out above, this trend line region, above this region here, should get ready to trigger a buy on the GBP USD. So we are bullish on the GBP USD. And for the dollar, for the major pairs, I also look finally at the New Zealand USD. Now, I want to sound a caution here. We are not suggesting you trade all of this setup, Now, we are all busy people, as I presume. So it's possible you might miss one or two. But then, no matter how busy your schedule is, you will still find some few pairs to trade. At least take 2 or 3, out of all the setup we're giving when they eventually, mature for trading. All right, so this is a New Zealand USD. You can clearly see on the weekly time frame that price is also bouncing off the trend line on the weekly time frame, and last week closed on the trend line again. So we expect a bullish movement in the course of this week. And if we go down to the 4-hour time frame, you can clearly see this is also forming an inverse head and shoulder, which will trigger a bullish breakout. So we also hold a bullish outlook on the New Zealand USD. But I will also say for this one, we should not neglect the fact that there is a resistance here, which is the neckline region. So it's good we'll wait for a breakout above that neckline to trigger a buy on the New Zealand USD. All right, so that'll be all for the major pairs. Now I'll look at gold. Now, gold, before the election, gold has just been in a world of its own. Just trending higher and higher. And last week, it looks like gold formed a head and shoulder pattern, and price has broken down below the trend line on the daily time frame. If you look again critically, we can actually draw a trend line here to give us a rising wedge pattern. So the question is gold ready for a bearish breakout, or is it going to go in the bullish direction? To be honest, I will advise we trade gold with a lot of caution, because any of these two scenarios can play out, in the course of the week. So what I will advise we do with gold is this. If we zoom down to the 4-hour time frame, I would say that gold is actually at a critical point. Now, if we look at the dollar index, we are bearish on the dollar. That's what we can see technically. And technically, in reality, gold is looking a lot bearish with a rising wedge pattern on the daily time frame, with a head and shoulder on the daily time frame. Technically, this guy is bearish. But there's something about how the market moves, how price works in the financial market. Gold is negatively correlated with the dollar index, meaning if the dollar index is buying, gold should be selling. If the dollar index is selling, gold should be buying. So now that does not mean in real occasions it's not possible for both of them to be selling at the same time, because what we're saying now means that both of them should be selling, which is going to go against how things work, because of the pairs of the currencies involved. Gold is XAU USD, while the dollar index is, the dollar and the index, the X. So both of them should not be selling at the same time. Let me go back to the dollar index so that I can give you a clearer view. So gold is looking bearish. The dollar index also, we said we are bearish on it. So what do we now expect, or how do we expect to trade gold at this time? What I will advise we do is this. If gold breaks out below, now this is looking like after the head and shoulder breakout, this is looking like a correction and then a further continuation. That is what it's looking like. So what I will advise we do is this. If gold is able to break out below this region here, we may be looking at taking a sell. If a new candle breaks out below this zone, we may be looking at taking a sell. But at the same time, it's also possible for price to drop to this and take this zone as a support and go back up. That is very, very possible. So if that is what happens, if it finds support here and this now becomes a double bottom pattern, if gold finds support at this finds support at this place, it may also become a double bottom, which may trigger a bullish movement. Why will it trigger a bullish movement? Because the dollar index is bearish. So technically, we should be looking for an opportunity to buy gold. You understand? So if that is what happens, then it means that we may look at taking a buy trade on gold, a bullish trade on gold, if price breaks above the neckline region here. So I would say that gold is just in between a buy and a sell. We need to wait for the market to do its thing. So it's possible in the course of the week. What if the dollar index decides to go bullish? If it breaks out above this region, because the election is over, it doesn't mean that the fundamentals in the US cannot still take over. So if the dollar index breaks out, then definitely it means we could see a bearish movement on gold. Yeah, gold will just have its massive crash. But if on the other hand, the dollar index maintains its bearish direction and gold now forms a double bottom, then we should be ready to go long on gold. So let's just watch out and let the forces of demand and supply, determine how we trade gold, for this week. So we should also have, this is even a further confirmation here. We have a support turn resistance. So if gold is able to form a double bottom, or even if it's not a double bottom, if price can reverse from here and break out above this support turn resistance zone, then we can look at buying gold. All right, so that's my view on gold. I think I've attended to most of what I wrote here. And the final one I'll look at is the DJ30. All right, so due to the election last week, we can see massive bullish movement on the DJ30. This is the daily time frame. But then we can also see that price eventually formed a rising wedge pattern, which is technically a bearish pattern. It's a reversal pattern. And a further confirmation to a possible reversal is the fact that price also hit a psychological level. Price hit a psychological level, at 44000. You can see that region I circled over there. And that psychological level, is acting as a confluence with the tip, of this, with the higher eye up there of the rising wedge pattern, which also means we will be expecting a bearish movement on the DJ30. And finally, if we zoom down to the 4-hour time frame, we can see that we had a rejection candle here, and we are seeing a pattern here that is evolving like a head and shoulder, which may lead to a bearish movement on the DJ30. So I hold a bearish outlook on the DJ30. All right, so that will be all from my analysis for this week.